on the TikTok platform. I don't know if the new algorithm can handle it. So we'll see what happens. But it usually happens right around 7 or 8 o'clock at the top of the hour when it starts getting a little fuzzy. So we're gonna keep it moving. If I have to switch over to to showing the live on my phone and sharing my screen, I'll do that as well. All right. But in the meantime, I'm gonna educate until we get there. Right. So happy Monday. Today was a crazy Monday. And look, I'm already seeing the lag, but that's fine. But happy Monday. But yeah, oil was crazy. I don't know if you guys saw oil today, but oil was absolutely bonkers today. Oil was absolutely bonkers. So if you were watching oil, you can watch oil on you can watch it in the futures market. We love watching oil through MCL. I'll show you guys how you could have traded it today. You could have made so much money in either direction all day long if you were looking for that $100 a day. Now, here's where a lot of people where you go wrong. And thank you guys, thank you Mika Trades for the big shout out. So a big shout out to you, Mika Trades, and a big shout out to Safari Don for sending out that those lovely big shout outs. Thank you, Safari Don, for those Go Populars, guys. I really appreciate it. If you haven't grabbed your Heart Me as you guys were coming in, go ahead and grab those Heart Me's. Going through the comments just to make sure I didn't miss anybody's stocks before I start educating. But yeah, today was a crazy day. This was last week was a crazy week. We just got to take it day to day. We got to take it day to day, month to month. But I hope you guys are approaching the market three different ways. Congratulations, Krista Agami, for being part of the fan club for 2 months. Congratulations. But yeah, it was a wild day. Guys, oil was up over 30-something%. It was the biggest move in oil in one day. And then all of those gains were taken away just like that and ended down for the day. That was one of the craziest moves I think I've ever seen. It was absolutely nuts. And if you were trading it, you didn't even want to trade the market. You were just in awe all day like this. Like, what the heck is going on here? All right, so let's look at some of the, let's look at what was actually going on in the market. Let me make this smaller. Put this down. Sorry. Put this down here. And let's look at oil, all right? So that was oil. I want you guys to look at this particular chart. On this chart that you're looking at right now, hey, welcome, superfan Ann Barrera. Welcome in all the way. Thank you for that, Heart Me. These were the micro futures of the oil market, and you could have been trading oil all week, all morning, all night long if you were if you felt like you can handle the volatility. What you guys are looking at, though, is you're looking at a week chart. So on this particular week chart, you guys are looking at a move from 2022, where oil was $129. So back in 2022, when interest rates rose, oil was about $129 a barrel. All right. Now check this out. Or a gallon. I don't know, $129 a barrel, my bad. Now it's sitting at $120 again. Oil had been going down in price, and usually, guys, what happens is when oil is going down in price, usually the stock market is going up in price, right? When oil goes down, stocks go up. Because people feel like, the consumer, oil is like one of their biggest expenses, right? So as oil goes down, that saves you money. You can spend more money on consumer goods, right? That's the psychology behind it. We don't necessarily know if that's true, but hey, that's what Wall Street loves to hear. Oil goes down, stocks go up. Stocks go up. Oil goes up, stocks go down. It looks like we peaked. Now, we were on our way. I'm going to be honest with you. We were on our way to $200 oil. We were going to hit $200 oil by the end of the week. We just were. The president had to come out and say something. We were going to hit $200 oil by Friday. That's how crazy the market was. We were going at the rate oil was going up. We were going to hit $200 oil by Friday. So the president had to come in. I don't know if he's lying. I don't know if he's not telling the truth. But they were like, look, Mr. President, you got to say something. The world is going crazy right now. There's nothing going on over here, as far as this oil. You have cut off the, I forgot the name of it, but, basically the ships can't get around. They can't send the oil to whoever they need to send it to. They pretty much cut off that whole area. And oil was about to go to $200 from $120. That means it was gonna more than double by Friday. And everybody was like, they were calling for it. They were like, 200? We already know that's gonna happen, but how about 250? This is what Wall Street was talking about. $200 oil. So now the president's been on. He done spoke about 3 times today. He been speaking all day long. And he shut it down. He was like, look, the war is almost, even if the war wasn't almost over, the war is almost over. Guys, we can see the finish line. No, we can't. But he had to say something. Because we were about to see $200 oil. That was going to kill the stock market. Not because companies weren't making money. It's just that there was going to be, the stock market, Wall Street, we love to sell first, ask questions later. It's just like if you hear gunshots, you're not going to look around and say, who's shooting the gun? You're going to run first and be like, hey, why are we running? You're going to sell first, ask questions later. So the volatility index hit 30. Which, in my opinion, I thought the volatility index, hey, thank you for that first gift, Soda. Appreciate it. VI Soda. Keith, thank you for the G7, the one and only. Thank you for that. What is that? But thank you for that gift. Thank you for the heart me's, guys. Thank you for the heart me's, the Go Populars. I really appreciate it. Look, we're going to try to do this as long as we can before TikTok shuts us down. All right. And we know we can go for about an hour, and then all of a sudden, I guess an influx of people come in on the TikTok platform and we can't handle the traffic. So we're going to go as long as we possibly can. But this is oil, guys. So if you notice that white line, I'm going to teach you guys how to draw that. Once we broke that white trend line that had been sitting there since 2022. So oil had been going down from 129 all the way down to $55. Oil had dropped from 129 to 55. Y'all remember when oil was 55? It killed the electric car industry because they were like, yo, oil is so cheap, who cares about electric vehicles? You can buy one of the first Hummers and we good. So what was the need for a Prius? What is the need for these hybrid vehicles when oil is so low? So then once oil started spiking, electric car companies were like, oh, into play. We might be coming back into play. So the president had to come in and say something. Even if he had to lie through his teeth, he had to say something. Like, look, guys, we at war, but it's going to be all right. Actually, they can't say that we are at war, which is interesting to me, too. Like everybody know that this is a war, but everybody's saying, oh, this is not a war. This is not a war. Like, do you understand that if a missile goes out and it hits a building and it kills 24 little girls, we at war. If you send a missile and kill, unalive, the top 40 generals in a regime and we're not at war? Like, come on, how stupid do we look? How stupid do we actually look? But if that's what y'all want to put out there to make oil come down, we're not in a war, guys. And this is only going to last for about 3 more days. Then whatever. I got a portfolio. Let the stocks go up in price. And you bobo the fools, y'all can believe that we ain't at war. And that we ain't send missiles over and kill the 40 top generals in a regime. And that we're going to try to go over there and take over that oil just like we took over the oil in Venezuela. Like, if you want to be bobo the fool, then be bobo the fool. But I'm not. All right. And whatever y'all want to say that's happening, then whatever. I know what my eyes see. I know what my eyes see. So oil went down in price. We broke through the trend line. And we started to spike, guys. Now, you're not going to be able to see it here, but we spiked all the way up to $120. Guys, on Friday, when we last spoke on Friday, oil was at $90, $80. And it rose to $120 in 3 days. Where's my coffee? We had the biggest move in oil over a 24-hour period in history. So you would think, if I looked up oil right now, you would think, oh, if we were up 30-something%, oil is probably up maybe 20%. Maybe it spiked 30%. People sold it off. Maybe it's still up about 20, maybe 25%, right? Wrong. We spiked 30% last night, guys. Oil went all the way to $120. Do y'all know what price we are sitting at right now? You ain't gonna believe it. You're not gonna believe it. We are now sitting at $88. 88, guys. Did you hear what I just said? On Friday, we were at $90. We spiked to $120. We were gonna see $200 oil by Friday. The president comes out and says, oh, first of all, we're not at war. Quit using the W term. And this thing that we're in right now is only going to last for about another 6 or 7 days. And it brought the oil price down, shut it completely down. It's amazing to see these types of things happen. But who cares? I'm here to trade it. I'm here to trade it. That's all I'm here for. I am here to trade it. So check this out. Let's say you wanted to trade. We were talking about futures all week long. So let's see how much money could we have made today if we woke up at 9:45. You didn't know if you were going to be long or short oil, and you decided, I want to trade oil today. I want to have fun with everyone else. We don't know what direction it's going to go into, but I just want to trade it. I want to see how it feels to be a day trader. Well, let's put on our day trading hats real quick. All you investors that are here and swing traders, just for today, let's put on our day trading hats. And let's go see how much money we the MCLs today. Okay. All right. So if we were trading the MCLs today, first of all, we need to know how much the MCLs are worth, right? So we're going to pull up the dashboard. So I don't know how much the volatility was up, but it didn't cause the volatility of the options to go up, but it was going to cost us. Let's go through the process. Hopefully we can get through this. Let's go through the process. And listen, guys, if I have to shut down this live because of Live Studio, come back in like 10 minutes, right? So if we go down, if you see me freeze and then you see it shut off, add 10 minutes to that and then come back. All right. And then I'm going to do it from my phone. But for now, we're going to try it this way. So I want you guys to see how much you guys are going to answer all the questions today. I'm not going to say anything. You guys are going to give all the answers. I'm going to sit back and watch how you guys would have traded oil today. But first of all, we need to know how much money we need. So if you were to pull up dashboard and you wanted to trade the MCLs today, from what you see here, how much money do I need? How much dinero do I need to trade one contract of the micro oil futures? How much money do I need, guys? How much margin? How much money do I have to have in my account? They're not going to debit it. They just want to know how much. They're just going to peek into my account and say, hey, buddy, you need to have a certain amount of money to trade oil today. You need to have $1,300. Exactly. Ziction 99. Give it up for Ziction. They know what they doing. Now, second part. We have $1,300. So we're like, woo-hoo-hoo, I get to trade oil today. Now, we only want to get in and out today, guys. Nobody wants to hold oil to the expiration date because then you're buying oil. When you're buying commodities or gold, guys, there's an expiration date. We don't want to hold this until the expiration date, and the expiration date ain't today. We want to get in, we want to rob the market, and then we want to go on our merry way. Now, how much for every, let's say this goes from 89.40 to 89.41. Y'all see this red? Let's say oil goes from $89.40 to $89.41. Every time it goes up that penny, how much do I make? Every time it goes up a penny, how much do I make? From 89.40 to 89.41. How much do I make every, what they call a tick? Boy, Ziction is on it. Y'all better go follow Ziction. Especially if you're a live host and you do stock market stuff. They are on it, doggone it. It's $1. That means if it goes from 89.40 to 89.41, I'm going to make $1. If it goes from 89.40 to 89.43, I'm going to make $3. So if it goes up, let's say it goes up a full dollar. If it, instead of 0.01, if it goes up 1.0, how much money do I make every dollar move? If this goes from 89 to $90.40. If it goes from $89.40 to $90.40, a full dollar, how much do I make? From $89.40 to $90.40. $89.40 to $90.40. Nope. Oh, yes, Anna, if it goes down, you lose that amount of money too. Yes, you lose. So every tick up, you make money. I said 1.0, guys, not point. Remember, 0.01 is 1. That means 0.1 is 10. That means 1.0, 1.0, Mateo got it right. would be $100. That means every dollar move, I'm gonna make a, because them little ticks didn't even matter today. I want y'all to understand that them little 40 to 41 to 42, it didn't matter because this bad boy was moving in dollars today. It was moving in dollars. That means every dollar move, you was up $100. It was moving so fast, guys. You were up or down 10% like in seconds. It was crazy. So I'm gonna show you guys what you could have done. Now, before we even start again, every penny move, we make $1. Every dime move, we make $10. Every dollar move, we make $100. But if it moves down $1, guys, from our entry, we got to get out because we're going to risk $100. Well, that's how much I'm going to risk. So when I take a trade, if it goes against me 100, Joel has to get out. Now, today it was so volatile, I don't even know. I might have had to increase my, risk to like maybe $200, but I don't know. Let's go and see what it was doing. All right, so let's get to it. We know that if we were trading oil futures, we know that every dollar move, I'm going to make $100. So we're going to switch over to my charts, my special charts, and let's see what we could have done. Now, we learned about Heikin Ashi and we learned about Heikin Ashi candles and we learned about the TTM trend earlier last week. So I'm going to show you guys what was happening around 9:45. Now, y'all know Joel ain't taking no dang trades until 9:45. Now, around 9:45, I literally don't give a dang what's happening. I'm going with whatever colors I start to see. So you guys are looking at Heikin Ashi candles. So the way we went over Heikin Ashi candles on Saturday. Heikin Ashi candles are very easy to read. The only reason why I don't teach you guys how to use them from the start is because you guys need to know the foundations of charts. So this is how the chart looks when you're first learning how to use the TTM trend. Okay, it's not gonna look like this, which is very, very pretty. It's not gonna look like this, guys. It's not gonna look like that. This, as a trader, in my opinion, is gonna help you with the trends. I want you guys to kind of learn how to go back and forth. Now, the way Heikin Ashi candles work is this. Let's talk about the candle itself. All right, this candle, and this candle were consecutive candles that showed you a wick only on one side of the candle. So this wick is on the top side. This wick is only on the top side. There's no wick at the bottom. That usually tells you that a trend is about to happen to the upside. If you get two consecutive candles that have a wick to the upside, the way that I trade, and I was telling everyone in my room today, you can take a trade at, you can't see it, the 10-day moving average or halfway into the previous candle. Now, I know that's a lot, and if you're a day trader, you kind of got that. If you're not, sorry, you got to go through the process of learning day trading. All right, I'm not here to teach you guys day trading today. We'll be here forever. You just need to know that if you're looking at Heikin Ashi candles say, look, if there's wicks to the upside, then their chances are we're going to the upside. If there are wicks to the downside, you see how these candles are green? You see how these candles are green, but the wicks are still on the lower side of the candle? Even though they're green candles that's supposed to represent up, the wicks actually overtake the color. So I don't want to confuse you guys, because we were learning with regular trending indicators that when it goes green, when it goes green, you're supposed to go up. If you get 2 or 3 consecutive greens like this one, and they're going at least across or up like this, 1, 2, and 3, you can enter this trade to the upside. However, that would have given me an entry right around 957 if I was going off of the TTM trend, or if I was going off of the Fubo Movo, right? But if you want to kind of just read Heikin Ashi candles for the way that they were created, you could have said, you know what? Even though these candles are red, as soon as the TTM squeeze, I know I'm confusing a lot of you guys, and I'm supposed to confuse you, because if you haven't taken anything that I've done, you ain't gonna understand nothing I'm talking about. The TTM squeeze is on the lower chart. The lower chart started to go blue. That means you had some bullish activity happening. Okay? That's the worst candle I think I've ever drawn in my life, but whatever the case. So it was blue at the bottom, at the very bottom of my screen. You're going to see that going blue. That means that's bullish. If I get bullish and I get bullish Heikin Ashi candles, you could have taken a trade somewhere in the 99.29 range. Now, we can sit here and we can argue all day about your entry, but who cares? Even if you entered this late, way down here at 10 o'clock, you still would have been in somewhere. I don't care what your entries were, guys. If you bought it at the 10-day moving average, if you waited until it turned green and went halfway, it don't matter. Everybody would have been in somewhere around $99.50. I'm not here to argue today. I'm here just to show you that it didn't matter what trend it was. We went from $99.50 to $104.50. How much money could I have potentially made on this trade? Do the calculations. If you go from $99.50 to $104.50, y'all remember every dollar move, how much money you were making. If you went from $99.50 to $104.50, potentially, how much money could you have made on this trade? And I need to see the math, please. I need to see the math. I see the dollar amounts. I need to see the math for it. First of all, how much did we move? So for you guys that are confused, all you have to do is this. First of all, we need to know how much it moved. It moved from $1.50. Hold up. It moved from $99.50 all the way to $1.50, $4.50. So we're going to subtract that. Right? $104.50, the highs from our entry, which was $99.50. That's going to give us a $5 move. Now, we gotta remember, how much money do I make per dollar move? Yes, it went from 104. It went from $99.50 to $104.50. See, guys, the $104.50 is the highs. The $99.50 was our entry. How did we know to get in at $99.50? Well, we're not going to argue that today, but there were multiple situations that told you should have been in somewhere around there. It could have been the Heikin-Ashi candles going green. It could have been the TTM trend. Let's look at what the TTM trend was doing. It could have been the TTM trend going green and you getting in somewhere, maybe even 50 cents later. But it didn't matter. Everybody got in. How much do I make per $5 move? Is $500. Now, we made $500. All right, I did the math. It's 100 times 5. It ran $5 every dollar move. I make $100. Zixion, that's pretty cool. I like that. I like that math problem. 104.50 minus 99.50 times 100. Where did times 100 comes from? It came from our calculation earlier. Now that's the maximum you could have made on this trade. Guys, y'all know how fast this move happened? At 9:51, I'm going to erase everything. At 9:51, I'm going to show y'all how fast this trade went off. That trade went off. You had from 9:45. You had from 9:45 till about 10 o'clock to get in this trade. You had 15 minutes to get in this trade. It hit its high. You're not going to believe this. It hit its high at 10:06. You could have made $500 in. You could have made $500 in what, guys? 15 minutes. I don't know about y'all, but I don't know too many people that make $500. That's like what, $2,000 an hour? Who you know charge $2,000 an hour for their services? Here's the $1 million question. To make that $500 just now, how much money did I need in my account? How much money did I need in my account to pull off this trade? How much? How much was it again? $1,300. You guys are smart. You guys are smart. This is the smartest educational stock room on TikTok. Hands down. I'm not the only smart guy in here. We got hundreds, sometimes thousands of people that are intelligent that come through this room. We know how to calculate. We have strategies. We have real strategies, not just getting in because the president's on. Let's go long. The president's on. Let's go short. No, we get in because the indicators tell us to get in. Now, here's what's crazy, guys. We ain't done trading for the day. If you just made $500, you should be thinking to yourself, wow, I got 5 more chances to be wrong. I can lose 5 times today. If my risk is $100 per trade, I can risk $100 5 times today and see if I can squeeze off another 500 or another 1,000. So let's see if another trade sets up. We're going to use Heikin-Ashi today because we used TTM trend all last week. Now, for any of you guys that already have the chart set up, let me know if you see another trade pop off, and let's see if you can see the same thing that we see on with Heikin-Ashi. Now, I'm using a 3-minute candle. Now, people ask me, Joel, you're teaching on the 5 minutes, so why are you trading the 3-minute? I'm going to explain to you guys why. Traders, real traders, realize that when volatility comes into the market, you have to change with the volatility if you want to keep consistent with the way that you're trading. The higher the volatility, the more you get this. The lower the volatility, it starts to go like this. The higher the volatility, you get this. So even when things are going up in price, it's going to go like this. The lower the volatility, it'll go up like this. All right. Higher the volatility, lower the volatility. So if you want to bring your charts down so that they can look a little bit more like this again, when volatility goes up, day traders will go down on the time frame that they're using. Now, if you're using a 1 minute all the time, there's going to be an issue because the only thing lower than a 1 minute is a tick. Most traders that I've seen are using maybe a 5 minute chart, maybe a 2 minute, maybe a 3 minute chart. And then when the volatility spikes, none of us are using 1 minute charts anymore. The only time you should be using a 1 minute chart is when you're finally about to get in something. Like nobody's using the 1 minute charts anymore, because if you're using the 1 minute chart, guys, you're really only looking for 5 to 10 minute trends. You're truly scalping the market. You're scalping. You're only looking for 10-minute trends. And that's fine. If you're a 10-minute trend scalper, do it. But a lot of you guys ain't doing that. Y'all using 1 minute candles to trade all day long, which works. And I'm going to tell you when it works. If you're using the 1 minute candle, aren't you always surprised that it works really, really well from like lunchtime or after hours, but it really doesn't work during regular trading hours? The reason is most of us are using 5 minute to handle the volume. Okay. And then we'll come down to a 1 minute if the volatility starts to spike. All right. I know that confuses a lot of people, but just think about it. The volatility index just hit 30 today. When that volatility goes to 30 to 40 to 50, think of it like an ocean. The waves are so big. That's why you can get a $5 move in oil in freaking 15 minutes. The volatility is ridiculous. So the 1 minute candles are great for now. But if you're using a 1 minute candle when the volatility is slow, it's very hard to see the trends happening. All right. So it's, use what you want to use. I'm just trying to go to ChatGPT. It'll tell you the same thing. Like y'all always want to argue with me on things that the masses are using because you want to feel like everybody's doing what you're doing. I do what ChatGPT. If ChatGPT says this is what the masses are using, then I'm going to use what the masses are using. If the 200-day moving average is the most used indicator on the planet, I'm not going to argue with anybody that you should be using the 100-day moving. Well, Joel, the 100-day moving average is a lot smoother. Yeah, who cares? I'm just explaining to you guys the fundamental foundations. The 5 minute is what most traders are using. The 1 minute used to be one of the most popular time frames, but because the volatility of most of these things, a lot of the things that we're trading right now, the margin and stuff is so high that we've now gone from a 1 minute to a 5 minute. And the stock market spends most of its time with a volatility between 14 and 20. What we're experiencing right now is not normal. During COVID, when volatility was high, when a lot of you guys first started trading, yes, you were supposed to use a 1 minute chart. So if you learned how to use a 1 minute during COVID, you were actually learning something that isn't normal. And then when we went to normal conditions, you didn't know what to do. You're like, I don't understand this. I can't see the moves. Why can't I make money in 10 minutes anymore, Joel? Because the volatility isn't high anymore. The volatility is low. And when the volatility is very, very low, you got to up the time frame on your charts for you day traders. Now, that's your education on trading. You can argue with me. Go argue with ChatGPT. Don't argue with me. I'm just explaining to you how it is. All right. Even with the Heikin Aiki candles, I know there's 17,000 different ways you can trade Heikin Aiki. If you pull up Heikin Aiki right now, I promise you 100% of the time, The first couple of paragraphs is going to say to look for a move to the upside, the wicks better be on the top side of those candles. If you're looking for a move to the downside, those wicks better be underneath the candle. You can pull it up on Gemini. You can pull it up on Perplexity. You can pull it up on ChatGPT. It's going to give you the same definition. I'm not here to argue with you guys. That's just the definition. All right. So the other trades. All right. So I only want to use. So if you're using the 1 minute now, use it. But as soon as volatility starts to go back down under, let's say 18, switch. If you're so comfortable with the 1 minute, try the 2 minute. Just go up 1 degree up. You're going to see the market a little bit better. All right. I go all the way up to the 5 minute. All right. Thank you, G7, the one and only. Big shout out to you. And thank you for those roses. Thank you, Mona Lisa, for the big shout out. I really appreciate it. And thank you for the heart me. So let's look for other trades. I see a question. So you're using the 1 minute when in this trade? No, I'm using the 3 minute. I don't ever go down to the 1 minute unless I'm about to enter an options trade and I have the option charted. That's the only time I use a 1 minute. I don't like going chart to chart, guys. I'm too old. I need to see everything. I don't want to go back and forth. Like I can go back and forth from the Heikin Aiki to I can go back and forth like this. I can go back and forth by looking at this chart and then going to, I can go back and forth from Heikin Aiki to, to the TTM trend, but it's the same chart. I use a 5 minute chart under normal conditions. And when the volatility starts to increase, I go down to a 3 minute. So I cut my volatility in half. So instead of using 5, I use a 3 so I can see the move a little bit better. And my entries are going to be entries and exits are going to be a lot faster. When I'm using a 5 minute and the volatility is lower, what I've noticed is that you're going to get 10 candle trends. Think about this. You guys are looking at a chart right now. Let's count the number of candles that are green. If you notice, 1 candle, 2 candles, 3 candles, 4, 5 candles, 6 candles, 7 candles, 8. You see how we trended for 8 candles and then it started to go down? What I've noticed as a trader, and I didn't learn this anywhere, and I learned later by going on ChatGPT, is that no matter what chart you're using, there's going to be 10 candle trends. So when volatility increased, my trades are going to be a lot faster. So if I'm using a 3 minute candle, that means my trades shouldn't be no longer than 30 minutes. 30 minutes, and then I need to start thinking about maybe getting out of those trades. But when I'm using a 5 minute candle and the volatility is less than 20, I can expect to be in a trade for an hour. How did I get that number? Because 5 minutes times 10 candles is 50 minutes. So my normal time that I'm in a trade when volatility is under 20 is for an hour. But because volatility is so fast now, it's gotten cut in half. So what I did was I cut my chart in half. So instead of going a 5 minute, I'm going to use a 3 minute candle. Instead of sitting in stuff for an hour, I'm going to sit in stuff for 30 minutes. 30 minute trades now. So if I had taken this particular trade right around, even though that was 15 minutes, 1, 2, 3, 4, 5, 6, 7, 8, about 24 minutes, that trade was over with in about 30 minutes. All right. Now, would I have taken this trade to the downside? No. But watch this, guys. Soon as it started to go red, watch this. I'm going to wait until I see 2 candles that have wicks to the downside. Even though these are going red. Oh, my fault. This is the TTM trend. So when I teach the TTM trend, guys, everyone knows you should be getting in this trade somewhere Once it started to go down, you could have entered this trade anywhere in this area right here. You could have entered this short anywhere in that area. Why, Joel? Because look, it started to go red. Everybody here can count. That's one red candle. That's two red candles. Once you get three, it's a go. That's two. Why doesn't this one count? Joel, why doesn't this one count? It does. It does. I want to make sure that the candles, if I'm going to short, are going sideways to down. Now, I don't think you guys can see it, but there's a 10-day moving average right here. There's a 10-day moving average that's going across right here. You can also get in right around that 10-day moving average. So that's our second trade. Now, here's what's crazy. What I'm teaching you guys right now, I'm not going to deviate from this. That means if you don't believe in the strategy, take your butt into another room, pull up the oil, pull up Apple, pull up Microsoft, pull up Google, put a Heikin Ashi candle on it, put a TTM trend on it, look for wickless candles, look for 3 in a row, and back test it yourself. What you're gonna find is that I have created one of the easiest strategies to learn, not only learn, but to apply immediately. You guys can learn this and apply it tomorrow. And I ain't gonna charge you $10,000 to do it. Now, you might want to, you can throw me a couple of Go Populars, maybe grab a heart me, maybe do a big shout out, but I'm not going to charge you for it. All right. So if you were using Heikin Ashi candles, watch how they change, guys. We're going to look. So before we even, you know what? Before, hold up. Am I muted? Oh. Before I even start again, before we look at Heikin Ashi, I want you guys to answer this question. When I put the Heikin Ashi candles on the chart in the next few minutes, what are we looking for? Please tell me in the comment section, because I don't like to teach and you guys not learn. What are we looking for? What are we looking for when I put that Heikin Ashi on that bad boy? What am I looking for? What's gonna determine if I want to take a short? There you go. And Inspector, you were right too. The Inspector too. You were right. I wanted a little bit more information. You want wicks to the underside. You want wicks to the underside. And also answer, you want 3 candles. That canceled should be candles. You want 3 candles with the wick to the downside. Now, here's the thing. You don't need 3. You need 2. I know you need 3 for the TTM trend. You only need 2 for the Heikin Ashi. Now, this is just my own personal strategy. You guys can use 3, 4. I know some people that look for 5. I only need 2. All right, so I'm going to look for 2 wickless going to the downside. That's going to be my entry. All right, so I'm going to be going back and forth. I'm going to be looking at the TTM trend, Heikin Ashi, TTM trend, Heikin Ashi. I'm going to be going back and forth. So when I put the Heikin Ashi on there, I want to show you guys, let's see if we see 2 wickless candles that are going to the downside. Now, the one thing I love about the Heikin Ashi, guys, is that the TTM trend is only found on 2 platforms, which is TradeStation and Thinkorswim. That's the only 2 places you can find the TTM trend, which is on the top. Heikin Ashi, however, is found on like just about every platform. Like everybody has access to Heikin Ashi candles. So if you don't have access to the TTM trend, you can use regular candles and then flip back and forth to the Heikin Aishi. The only reason why I say flip back, guys, is because if you only look at the Heikin Aishi candles, Heikin Aishi is not going to give you the opening and the closing price of that candle. And it's also not going to give you a real value of where the halfway mark is for the candle that's prior to it. So that's why I got to go back and forth. I use the Heikin Aishi to kind of give me a gauge of what's happening. And then I can enter by looking at normal candles, because I like to get in on the halfway mark of the previous candle, because y'all know I got to buy. Just making sure I'm not freezing. Okay, cool. I like to buy anything with a little bit of equity in it. So I want it to pull back just a little bit. It doesn't have to be a lot. I just want it to pull back a little bit, or it can pull back to what we call a 10-day moving average. Now, I know I got you guys in on the 513 crossover strategy. I know I did. I know it. I had to do it. Remember, paint the fence. Paint the fence, wax the floors. Paint the fence, wax the floors. What was the third one? It was wax the floors. There was three. It was paint the fence, wax the car. Oh, it was wax the car, and then it was wax the floors, right? Wax the floors, wax the car, and paint the fence.
Someone is at front door.
So now that you understand 513, how come people only come to my house when I'm doing lives? Y'all got to be all in my business. So I had to teach you guys that first. So once you started understanding 513 crossover strategies, if you understand it, you can now take it off of your charts and put in a smooth moving average. I use a 10. Now, why do I use a 10? Because it's right in between 5 and 13. And now, when I'm trying to buy it on sale, if it pops up to this 10-day moving average that you guys can't see, it's real faint on my chart, because I want my charts to look very, very clean. All right, I've been looking at a lot of TikToks, and for years, I've had the best charts, and it seems to me that everybody has caught up with the beautification of their screens. So I got a little jealous. So I was like, all right, let me clean up my charts a little bit so that I can still be known as one of the few traders that have some of the most beautiful screens that are out there. Now, here I go. I'm going to switch it over. Let's see if we can find two wickless candles to the downside. Let's see if the TTM trend would have gotten you in, because the TTM trend, before we even start, the TTM trend would have gotten you in somewhere in the 100 to, let's just say, I like to keep it simple, $100.50 range. You're going to start shorting. You're going to bet against oil right around the $100.50 range, which is right around where the 10-day moving average is. All right. TTM trend started to go red. It popped up to the 10-day moving average. You decided to short it. Your risk is going to be how much, guys? If I'm risking $1, what price do I have to get out at? If I get in at 150, well, I just gave you the answer. If I'm risking $100, what price does this have to pop up to for me to get out? I didn't say how much money I needed. There you go, Lisa. If I'm risking $100, if I get in at 150 and this stock, this futures contract pops to 100 and 150, Joel has to get out. I have to get out, guys. If I want to be a great trader and I want to live to trade another day, I have to get out if this pops to 101.50 because every dollar move is $100. Now, let's switch this bad boy to Heikin Ashi. Here we go. Heikin Ashi, here we go. Bam! Are there any wickless candles? The answer is yes. Look, guys, here's wickless candle number 1. The very first candle that printed. Would you look at there? Where is the second wickless candle? The second one that's moly. You can get in anytime you want to with a $150 risk. Now, I like to get in halfway between the previous candle. So if this is candle 1, this is candle 1, and this is candle 2, if I decide to get in on the third candle, which is candle number 3, I like to get in halfway in between that candle. That means I need to get in somewhere halfway between that candle. Do y'all know what price that was? You got it, 150. It didn't matter if I used the Heikin Ashi strategy or if I use the TTM trend, I'm in at the same value, which is 150. Now, check this out. How far did this bad boy drop? Well, we dropped from $100.50, guys. And we kept dropping, and we kept dropping, and we kept dropping, and we kept dropping, and we kept dropping. Do y'all know that at the lows of the day, we were sitting at, what price is this? $81.16. Let's just say it was $81.50. How much money could I have made betting on the market going down? It's gonna blow your mind. $81.50. Guys, it ran so much, I gotta make the chart smaller so you can see where we got in at. All right, let me erase 101.50. Uh-oh, did I erase the wrong one? Hold on. All right, I'll just make this bigger so you guys can see it. We got in at 150. Let me erase 101.50 because we never popped above it. All right, we got in at 150. It ran down to 81.50. Now, you don't know if you could have made that much money, but let's just say you held it till 4 o'clock. Somebody in the comment section tell me how much money did your boy, how much money could your boy have made today shorting oil? I think, all right, I need to see the math. All right, money, we'll look at why a 7-minute why a 7-minute candle? Why a 7-minute candle? Oh, wax in, wax off. All right. That's what it was. All right. The answer is 1900. I want to see the math. JC, you gave the right answer, but I want to see the math. We're here to learn, so I want to see the math. The math is this. If you dropped 19 points, where did we get 19 from? Guys, where did we even get 19 from? $100.50 minus 81.50. 150 minus 81.50 is the amount of points you would have made. All right, that's 19. So, for you guys that didn't know the math, all we did was our entry in oil. Just think about it. If you looked up and you know when they're like, oil is $100 a barrel. Well, you could have traded oil today at $100 a barrel. And you could have said, man, it's going down in price because the indicators are telling you it. Because the Heikkinen Naishi is telling me that it's going down. $100.50 minus $81.50 is 19, but you didn't make $19. You made $100 per dollar move. That means, hold up, Joel, I could have made $1,900 today because it went 19 times 100, which is equal to 9, How much money did I need to take this trade? How much did I need in my account? How much money did I need in my account to take this trade? How much margin did I need to take this trade? You almost got it, big Al. You added one extra 3. You needed $1,300. So guys, if I had $2,600, I could have made $3,800. But here's what's crazy. Y'all forgot. What do we forget? We forgot something, Joel. We made $500 on the first trade. You made $500 on the first trade going long. Then you switched it up and went short. You could have had a $2,400 day being a bull and a bear. Being a bull and a bear. Great traders, the best that I've seen, we wake up and we have a neutral bias. That means we don't wake up just saying oil is down today, I'm shorting. Oil is up today, I'm going long. We don't trade that way. We wake up and we have no idea if we're going to put on the bull suit or if we're going to put on a bear suit. And if you wake up that way, you're going to trade better. A lot of you guys are using fundamentals and your gut to try to trade, which it works for a little while, and you only got to get rich once. Some of you guys can do that. If you get lucky 7 times in a row with $1,000, you can take 1,000 to 1,000,000. But if you try doing that year after year after year after year, it's not going to work out. So in my opinion, especially if you have a big ego like I do, you got to put your ego in a box. And you have to say to yourself, the market is bigger than me. The oil market is bigger than me. Even if I'm a millionaire, there's billionaires that move the market. Okay? I'm always going to be a small fish in this huge pond. So I need to sit back like a goldfish with shark swimming around, and I got to let the market tell me what to do. The market tells you what to do every day, guys. The question is, can you read it? Can you actually read the market in real time? Where most people go wrong is that you don't adjust to the market conditions. You don't adjust to the market. If volatility goes up, guys, if I'm a football player and all we do is run the ball. I'm sorry. Let me take that back. Let's say we were a passing team and all we do is pass the ball, bombs. And then we go into a stadium, there's 50-mile-an-hour winds, and the field is an open field. That means we get all the conditions and it's snowing outside. You can't go into that game saying we about to throw 70 to 80 yard bombs. You gotta adjust, because if you don't adjust, you ain't gonna win. The best teams know how to adjust. The best traders know how to adjust. If you can't adjust, that's why the problem is there. When volatility goes up, guys, you got to recognize first there's volatility. In my opinion, you need to go down. You need to scale down the chart that you're using. When volatility decreases, when the market is boring and it's slow like molasses, a 1 minute chart is the one thing none of you guys should be looking at. You should be looking at a 5 minute chart, maybe even, like your boy in the comments section said, a 7 minute chart. So that you can really see the moves, because you might have to be in that asset a longer time to get the amount of money that you're in. Or what traders will do is, if you normally trade 10 contracts, you probably need to trade 5 or 4. Because your risk probably getting stopped out every time you hit the button. You're like, why am I getting, last week I wasn't getting stopped out at 100. Well, maybe you need to risk 200 this week, or cut it in half. And now, instead of risking 50 points, you can risk 100 points with half the contracts that you're using. Decrease the amount of contracts you're using, increase your risk. Very easy adjustment. The adjustments don't have to be huge, guys. They don't have to be so big that you're adjusting every day. It's just that the volatility index hit 30 today. Like, come on, guys. How often do we see 30? We don't see 30 but 3-4 times a year. So it was common sense to be like, guys, there's a lot of volatility out there. So you're going to get chopped up. So you need to use half of what you're doing, because now you can make as much as you was making last week a lot faster. But in order for me to see the moves, I can't use a 15-minute chart. If you use a 15-minute chart with a stop, you're getting stopped out every time, because these moves are happening every 15 minutes. Now, that was a huge move to the downside. I get it. But even in those whipsaws, guys, those whipsaws that we saw in oil today, let's look at the whipsaws. Remember, our risk is our risk is like $100. Do y'all know how much it was whipsawing? This move right here, this move right here, this move right here, this move right here, guys, let's look at some of these moves. Like, all right, that first move was pretty big and it went straight down. So we saw this morning, that was a $96 to $104 move, right? So that was an $8 move. Then we whipsawed and went from 104 back to 94. So we went from 94 to 104 to back to 94. Then it whipped down from 97 to 93. That's a $4 move. That's like $400. Then we whipped from 93 all the way to 96. That's a $300 move. And guys, that was happening in 1, 2, 3, 4, 5, 6, 7, 8, 9. Y'all remember how I told you trends happen in 10 candles? This was even though this went sideways, the trend, even though this went sideways, sideways meaning it went like this, right? Even though we went sideways, when it started to trend, the trend was only about 10 candles, right? This is candle 1. So by candle 10, which is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, guys, we peaked at the 10th candle on this low before we started to go sideways again. Because if you have been watching and learning, trends really only happen for about 10 candles, depending on the chart that you're looking at. Even this trend back to the upside. Look how fast the trend happened. It happened. This is candle number 1 going up. That's candle number 1. Candle number 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. It took 11 candles before
Someone is at front door.
before that trend ended. Okay? So you're getting these 10 candle pushes and then it's ripping the other way. Then when it goes down in price, y'all see this? This trend kind of started here. If you're using my 10 candle system and you start riding that trend right about that 8th or 9th candle, you should be thinking about getting out. Candle 1, 2, 3, 4, 5, 6, 7, 8, 9. The low was the 9th candle. Someone asked if I was a professional trader. Nope, I'm not a professional trader. I'm not a professional trader. Nope, I'm just like you. All right, so you're going to get trends in the market. So yes, you're going to shorten the market and the trends are going to be a lot slower. Now look, for you swing traders, when the volatility is high, you ain't going to get no 10 or 15 day. You lucky if you can stay in that bad boy for like 3 or 4 days. 3 days at the most. These moves, guys, is lasting a day and that's it. When volatility is high, stop trying to make money in the next 3 or 4 days. You are going to get chopped up, chopped silly. In my opinion, in my humble opinion, and this is what I've been teaching for over a decade, either get in and out the same day or hold 30 days or longer. The hardest way to trade on this planet, especially when you have an administration that's in office like the one that we have now. And I'm not here to be political. I'm just here to tell you guys that this is a very volatile administration. Within the first 2 years of President Trump being in office, guys, we've seen the volatility index go to 50 twice already. We saw it go to 50 in August of 2024. And then 7 months later, we hit a 50 on the VIX in April. Do y'all know that the average time in between a 50 VIX? I want you guys to think of the VIX like, I'm going to pull it up. I want you guys to think of the volatility index like you think of an earthquake. This is the volatility index. All right. Guys, we only see a 50. Now we hit 30. We hit 30 today. So if you don't know anything about the volatility index, well, man, you are the luckiest person, luckiest people on TikTok right now if you've never heard about this, because this is the best indicator ever created in history, in my opinion. If you want to learn how to catch the lows of the market, you're looking at it right here. But they only come every 18 months. The volatility index, the fear index, only happens every 18 months. So if you miss it, you might have to wait 18 more months until you see another one. I don't want you guys to believe what I'm saying. I want you to use your eyes. I didn't create this chart. I didn't create this. Well, I created the chart for you to see. But that line that you guys see, that 50, y'all see how we rarely hit 50? We hit 50 only 9 times in the last 20 years. 9 times. That means on average, you're seeing a 50 every 2 years. But when you hit a 50, it is the low of the market. Well, it's been the low of the market. You want to learn how to catch a bottom? You just learned it just now. I've caught the last 4. I can prove the last 3. I've caught the last 4. I've proven the last 3 by showing you guys my receipts. And not only did I catch the lows, I caught the day of the low. The day. Wouldn't you want to learn how to catch the lows of the market the day it turns around? Well, you looking at it. This ain't my indicator. This is an indicator that's been around forever that everybody knew about, that a lot of you guys are learning about today. Why am I giving you this information? Because there's trillions of dollars in the stock market. We all can make money. Trump had 50 hit twice in 2 years. It might he tried to get it to hit 50 this year. All right. It hit in April. Well, I guess he wasn't, he came in office in what, 2000? How long he been in office? It seemed like forever. This is year what, 2? This is what, 2000, so he came in 2025. So that's not true. 2024 was Biden. And then 2025 was Trump. All right, so we experienced, so it wasn't Trump. That's my bad. I was wrong. Sorry. But we saw a VIX hit in August of 2024, and then we saw another VIX of 50 in April of 2025, and this cat trying to make it hit 50 again, and guys, years in a row where the VIX hit 50. So for a lot of you guys that are seeing the market now, this is not normal. This is not normal market movement. We don't normally see oil go up 30% in one day and then end the day in the red. This is not normal, people. This is volatility at its highest. But it's interesting that oil did what it did, guys, and the VIX only hit 30. That's actually good for the stock market. That means nobody is scared of giving up their stocks. In normal conditions, if we go to war the way that we went to war, and we see oil go to $120, the VIX should have been at 60 or 70. The VIX barely broke 30. That means, guys, when I see things like that, it tells me, yo, the stock market is resilient right now. Like, nobody is selling their stocks. Ain't nobody selling their crypto. It went down a little bit. Like, it feels like we went down a lot. But it's telling me something about the market, that the market actually wants to go higher. It's just that we're in a situation. We're in a situation right now. So what's going on with you and Bobby? Oh, we in a situation. Oh, y'all broke up, huh? We in a situationship right now. We not at war, guys. We just in a situationship with Iran. We just blew up their top 40 generals. We in a situationship. Anyway, we hit a 30 VIX today, all right? So I want you guys to think about this. If we get to 50 in this condition, it might be the low again because this market is resilient. It don't look like it wants to go to 80. We went to 80 during the pandemic. We went to 80, 79, 80 during the 2000. Y'all see this? You see all the way to your left right here? Oh, you guys can't see my cursor. But over on the left side of the volatility index, that big old spike to the upside, guys, that was the 2008-2009 real estate market crisis. The pandemic tried to get it as high, but it couldn't quite get it there. So we saw at 80 during we saw at 80 during the biggest real estate crisis we've ever seen in history since the Great Depression, which will cause a 80 VIX. And we saw another 80 VIX during a pandemic that we had not seen in 500 years. Oil just had the biggest spike that it's ever had in one day. And then followed it up by the biggest drop in history that it's ever seen in one day. And the volatility index was like, meh, I've seen worse. I've seen worse. The market shrugged that mug off like it was nothing. It was the craziest thing I've seen. So, we were all prepared for the market to drop. And maybe Maybe there's going to be follow through. I don't know. But normally on a day like this, you would have seen people throwing up stock right now. And that's not what you're saying. In fact, let me pull up let me show you guys how we ended the day. This is how we ended the day. Do y'all see any red on there? This is how we ended the day. The market didn't give a dang about the war or oil. I'm sorry, about the situationship in oil. Didn't care. But I still want you guys to look at it because the VIX is spiking. So we are not out of the, what's the word? We're not out of the, whatever. We're not where we need to be yet. Y'all know y'all need to help me with words. I'm getting like my dad now. Oh, the woods. There you go. Thank you, Sean. Thank you for helping a brother out. We are not out of the woods yet, people. We are not out of the trenches, the woods, or whatever the heck we in. We ain't out yet. We ain't out yet. All right. What you should be doing right now is you should be compiling a list of stocks that you guys are interested in. All right. And we're going to look at those stocks in the next 30 minutes. So let's look at some of the biggest movers of the day. All right. Let's look at some of the biggest movers of the day. All right. We had Hims and Hers that's been moving. Right. What else was a big move today? What else was a big move today, guys, other than Him and Hers? And let me go ahead and pull that up. Actually, let's look at the S&P 500. Let's see where the S&P 500 is at this moment. So if you don't know what the S&P 500 is, it's the 500 largest companies on the planet that represents our business economy. This is what we use as the foundation of where we at this moment. Like if we really want to know where our economy is, business-wise, we look at the S&P 500. Well, guys, I hate to tell it, I hate to show you guys this, but don't nobody care about what's happening in your neighborhood or what's happening at your job. Like these companies don't care. They are firing. We just had one of the worst job reports in the last 3 or 4 years. And Wall Street don't give a, they were like, man, who cares? we're in a situationship, oil spiked. We had a jobs report where we thought we were adding jobs and we took away 92,000 jobs. Thank you, Mr. Bell. And the market said, yeah, we good. Everything's okay. I'm like, what is going on? Guys, the all-time highs was 697 in the stock market for the S&P. Y'all know where we sitting at? 678. That's the highs. Look, I'm going to show y'all where the highs are. I'm going to show you where the highs were versus where we are. This was the all-time highs. This is the all-time highs. This line right here. This is where we are right now. This is where we are right now. Now, you got all these cats, but the guy from The Big Short said that the market is, well, that's where we at. That's where we are. Y'all know what this is way down here? This is when the guy from The Big Short made all of his money. Right here. I'm going to show y'all where the guy from The Big Short. I went and saw the movie, loved the movie. Brilliant. Guy made billions. This fool been short since 2000. He been short since then. Now, since then, the market went from $67 to $697. And this cat been short every year since he made his billions. The market has grown 1,000%. Guys, in the amount of time that he's been short in the market, The market has run 1,000%. Now I'm gonna show you guys something because the man was brilliant. He was brilliant, but I'm gonna show you something that y'all don't look at that I look at. He's been wrong for 1,000%. Wrong. Dead wrong. Just wrong, losing all y'all money. He was right. I'm going to show y'all when he was right. He was right here. This is when he was right. Looks like a lot, right? He was right for a good, and don't get me wrong, I respect everything he did. The market dropped 58%. He was one of the creator of, y'all got to help me out. What was the type of papers he created that they use now to this day? Put it in the comment section. He created, I can't think of it. It was called, I forgot what it's called, but companies are using it to this day. You guys will know what I'm talking about. It's a type of paper. It's a way that you can short the market or protect yourself when things are going down. And dang it, I don't know why I can't think of the name of it. One of you smart geniuses, there you go, default swaps. Thank you, JC. JC, you need to teach a course. He did credit default swaps. Made a killing. He was right when the market dropped 58%. Right. He was right. Well, to be honest, guys, he was wrong for 3 years. And then he was right for 1 year. It finally failed. He had been short in the market since like 2007. So don't get it twisted. This joker was wrong from here to here. He was wrong for longer than he was right. He was wrong for 2007, 2008, finally paid off in 2009. I give anybody any props in the world for making billions of dollars. But dude, you was wrong for 3 years. You was about to go bankrupt. And if that bank didn't give you a loan to be able to stay in the trade, you would have got wiped out just like everybody else. See, I know what to listen for. And then he should have just gone on his merry way, but he didn't. He made $1 billion, was wrong for 3 years, made money for 1 year, became a billionaire, and then decided he wanted to be a trader. And this cat's been wrong since 2008. Look at what the market did. It went up 1,000%. 1,000. Guys, not 58%. 1,000% it went up. Look at this. Look at how long this cat's been wrong. So for those that follow him, understand that if you double every time if I go to the casino and I got unlimited money, if I go to the casino and I see black hit and I bet $20 and I lose, and then I say, all right, the next bet I'm going to bet $40, and then you lose, and then you like, all right, the next bet I'm going to bet $80. And then you lose. And then you like, you know what? The next bet, I'm going to bet $160. And then you lose. And then you say, you know what? On the next bet, I'm going to bet $320. And then you lose. And then on the next bet, you say, I'm going to bet $640. And then you lose. And then you say, you know what? I'm going to bet $1,200. At some point, you're going to win. At some point, you're going to win. But if your money ain't that long, you can't just continue to double up and double up and double up and double up until you win, or you will go broke. It wasn't even the fact that he knew about the bubble, guys. Everybody knew about the bubble. In fact, look, watch this, guys. Like, I'm not a hater. I promise y'all I'm not a hater. I really am not. If I was a hater, I wouldn't have gone to the movie to watch the movie and learn what he did. Remember, I don't know anything about credit default swaps. I think that is a brilliant thing that he done. My issues is that, dude, stay in your lane. Stay in your lane. Do what you do. But because you made money holding something and betting on it and keep leveraging yourself up, that was your strategy. I see something that's about to happen. Let me leverage up. Do y'all know that the market drops 1 year out of 4 years anyway? Y'all know that, right? Y'all know the market drops like 20 to 30% every like if I take 5 years, 4 years the market is up. One of the years the market goes down 20 to 30%. So what? The market dropped 50% then. 3 of the years he was wrong. If you use statistics, you could just be like, all right, if there's 3 or 4 up years, I can see why he's ramping up now, because we've moved up in the market. 2022, we had a down year. 2023, we had an up year. 2024, we had an up year. 2025, we had an up year. We're due for a drop. You don't have to be a rocket scientist to know that. The problem is he started shorting like, let's say the market don't fall until 2027. Do you guys have enough capital to wait 2 years for us to ultimately fall? I don't really